Well, Rajesh Kothari is with us, Managing Director at AlfAccurate Advisors. He's with us. Rajesh, good afternoon. Good to have you with us here. Thanks very much for your time. I should say congratulations. We were chatting briefly and you mentioned that one of your core holdings is up 6x today. So I'm not going to ask you which one is it, but congratulations. And, you've done well. And you've done well while avoiding some of this, high beta, very high momentum, which is all the rage. It includes metals, PSUs, oil and gas, energy, etc., etc. Well done. Rajesh, but what from here? We're speaking for the first time after these results, etc., came through. Markets are looking much better, of course, as compared to what they were doing on Tuesday. What's your sense? Does anything change?
So thanks, Prashant. I think three important things from the election outcome. The one things what probably is not going to happen, probably will take backseat. Is any land reforms or labor reforms or PSU divestment, I think we need to forget about it, at least for the time being. Second very important thing is unemployment, I think was a major issue, and therefore the thrust on manufacturing will continue. So that thesis one should keep playing on. The manufacturing side will keep doing well. But importantly, the third thesis, which is the focus on spending, focus on consumption expenditure, I think that has probably a little bit taken a back seat, and that has to come back in the front row. So I think these are the three broad observations from the political perspective. From the market perspective, from the beginning of the year, our theme is be bullish but be prudent. I think the risk management is going to be extremely important as market enters into more volatile zone. Please remember, the coalition government means more headlines frequently. Some headlines market may cheer up, and some headlines probably many stocks may go down 10, 20, 30%. So, and those headlines will keep changing every week. So you need to pass through, you need to navigate those kind of volatile times. Market will keep delivering you returns, but what you own as a sectoral level and what do you own as a stock level, and more importantly, what you basically do not own, that basically will decide. So I think the quality will take front seat and momentum will take back seat. Please remember, last 18, 24 months, it was a throw the dart and make the money. I think next 24 months are going to be different compared to what we have seen in last 18 to 24 months. And that basically means we need to extremely remain focused on good quality, good growth, good governance, and play reasonable valuations, don't overpay, and be agile. If you think that you already made reasonable money, then probably one can move and focus on something else. So I think that's basically going to be the broadly how we look at the market over next 6 to 12 months.
Okay, all right. Rajesh, stay on. We have more questions for you, but let's also address, of course.
An update, still in conversation with Rajesh Kothari, Managing Director at AlfAccurate Advisors. Rajesh, how crucial will be the positions which will be given, the cabinet positions that the street is watching out for? And suppose if the key ministries of railway, infrastructure, digital India, they go to the allies, will there be a rethink? How would you approach this?
Well, I think, it is too premature to right now think about it because the names are not yet announced. But I think at a broader level, the government basically will decide the action point for each ministry. And irrespective of whosoever is sitting on the driver's seat, it is just not driver is going to drive, right? I think the entire thing have to go together. So, there are few important, that's why I say the manufacturing thrust will continue. So think from the market perspective, and I'm forgetting everything else. Let's focus on market. So manufacturing thrust will continue, number one. The power is something very, very important. Electricity is basic need. So you cannot tamper with power. You cannot tamper with transportation. So, making of roads or making of railways or making sure that power is available to every citizen 24/7. I think this is non-negotiable. But within that, very importantly, I think what we are doing, at least from our portfolio perspective, we are avoiding the power finance companies, correct? Because remember the days when there was an issue with the SEBs, they became a loss-making company. And there are a lot of things NPA happens. So power will be there, but whether it will be profitable or not to the lender or to the generator, that something is going to be a little bit, we need to think through it. So for time being, probably our thought process is avoid names where there can be risk. And at the same time, there are a few things which probably will continue to accelerate. So, for example, as I said, the manufacturing theme that will continue. So, on that side, we are more focusing on consumption. We are more focusing on manufacturing, and of course, then there are others, which has nothing to do with the election. Say, for example, automobiles or auto ancillaries, or pharmaceuticals, which are the very reasonably attractive valuation. There are a lot of other things, on the market apart from just playing the election and the government-related policies. There are many things else as well.
Okay, Rajesh. Just to sort of sum things up, now as we are moving towards the budget and we have more clarity on who's heading what ministry, what will be the overall construct of your portfolio and changes, if any, specifically towards the capex and manufacturing theme? So if you could just break it up, I mean, overall, how much would be defensive, IT, consumption? How much would you still keep on the more aggressive side, more richly valued stocks in manufacturing and capex?
Good question, should be. So, automobile and auto ancillary is about 9 to 11% of the portfolio across by both AAA IOP as well as AAA budding beast strategies, and they are doing extremely well. More electrification of the vehicle is continuing. It means more sensors, more cameras, more airbags, and many more such things. So that remains a good part of our portfolio. Our second big holdings, of course, is consumer, where we own anywhere between 15 to 18%. And I think with this government new thrust on the rural economy revival, apart from that, of course, the normal monsoon, which is predicted by IMD, that argues very well for the overall consumption as a theme. Here we own both consumer discretionary as well as consumer FMCG. And I think they both are going to do very well, because of the revival. The third important piece, of course, is the banking and finance, which is about 26, 27% of the portfolio. But here, basically, we are holding more private sector, whether it is a private sector banks as well as NBFCs. We also hold very selective 1 or 2 PSU names. So this is 28% of our IOP portfolio is the banking. Fourth is the pharmaceutical, which is again we are very positive on this theme from last 3 to 4 months. And then the fifth comes the capex related themes. But in capex, we are just not playing the India. We have selected the businesses which have very strong India business as well as very strong export business. And they are seeing tailwinds on both the sides. So more product portfolio kind of a companies, which is again less dependence on government. Of course, there is a dependence, but the dependence is a little bit lesser rather than playing pure PSUs. So that's basically the capex side. And then of course we hold about 9 to 10% software. So it's a fairly diversified portfolio without much dependence on one single sector in a big way. And of course within that high growth and best of the balance sheet. That's how we are constructing the portfolio.
Right. Rajesh, do you want to, since there's so much has happened, so much dislocation within stocks, etc. has happened, I just will read out this flash. ITC shareholders have approved the demerger of the hotels business. So that's essentially the news which is coming through. And I think that's very well advertised. But now this needed shareholder approval and it's kind of come through at this stage. Rajesh, in terms of specific, 1 or 2 ideas, if you want to discuss, I mean, just to tell our viewers how you're thinking about these things now. I mean, would you want to do that? Because, I mean, stocks have moved quite a bit, quite violently over the last few days.
I think that violent move, what you are ascribing is more towards the PSU basket rather than to other baskets. And I think very important is you look at 31st March stock prices and you compare today, rather than Thursday, Friday and every day, because otherwise you need to be nowhere. And still you will see there are many stocks which are done extremely well. And there are enough opportunities which are still available at a reasonable growth and reasonable valuation. Like auto ancillary I'm talking about, like one of the company which is a core holding, which we were discussing, like Uno Minda. Please put a disclaimer. We are holding this company, correct? Now, forget the case in point of specific company. But if any global company who is coming to India, would like to have a great market share, there are hardly 4 or 5 ancillary groups to whom we can approach. So when you're basically having a portfolio of companies, be it a Uno Minda or be it a Gabriel or Anand group, these are the groups who can basically, cater to your requirement if you're coming from Japan or if you're coming from US or if you're coming from Europe. These are the guys who have the capabilities, technological bandwidth, They were right balance sheet, debt-free balance sheet, and they were great plants and great labor and so on and so forth. So I'm saying one needs to think through like that, and those are the things where you basically can make huge multiplier returns. Unfortunately, we cannot talk stock specific more because of the regulations, but that's basically the overall thought process. While selecting the companies.
Okay, since you did mention, and of course you put the disclaimer yourself for Uno Minda, where are valuations at, Rajesh, for something like this?
Well, valuations are expensive, from a traditional perspective, but moment you put PEG in your framework, then valuation probably will look a little bit reasonable. Please understand, the EPS, what Street is assuming, where generally Street goes wrong is that because once you have a new joint venture which comes in, all of a sudden your next 2 years, 3 years, the visibility after 18, 24 months is completely different. Your size of opportunity, for example, the new joint venture, what the company has signed, the content per vehicle is completely different compared to where are you today. Am I right? So it is a 3x to 4x increase in size of opportunity. Your TAM, the total addressable market size, therefore, goes up meaningfully. It is not a small steps. And likewise, if you keep adding, like Gabriel, for example, we are holding this stock. Please put a disclaimer. Now, moment they added sunroof, they are number one in shock absorber, top 3 player in shock absorber industry. And then they added sunroof as a second category. Again, they are going to become top 3 in sunroof. Now, if they get like this 1 or 2 more over next 4, 5, 7 years, which is possible, think of it, what will be your EPS, correct? So sometimes you need to go really deep dive and think a little bit, out of box, think a little bit strategic, a little bit long term, and that can probably help you to, make a little bit extra alpha compared to the normal market returns.
Okay, no, absolutely. Take that point. We had Uno Minda, of course, with us. I'm not sure if you saw the interview in the morning with us, and they did talk about the sort of opportunity that they see. They didn't, of course, quantify numbers per se, but they did give us some numbers, and we'll have the sort of details up for you a little later. Thanks very much, Rajesh, for joining us. It's a pleasure, as always. Let's focus on some